Okay, you are welcome again. Today we are going to be looking at counter trend trading. Counter trend trading. How to trade counter trend using smart money concepts. As we should already know, first thing first, we have to map out the correct and valid market structure to identify anything in the market in as much smart money concept is concerned. Then, if for example price is bullish and before there is a break of structure, a pullback to form inducement occurs. Then after break of structure with candle closure, this candle closure very important. That is how we identify our valid break of structure. Only when the candle closes below it or above it, depending on the trend, then we can now switch to the lower time frame for this entry. How to trade on the trend, counter trend. Okay, our target when we enter using counter trend, our target is to counter trend or trade, which is to sell until inducement point is taken, because we are maintaining bullish market. So our whole point here is to try to sell in the lower time frame at that point to the higher time frame inducement point. Okay, that's our target. Then what if no entry in the first pullback and price form new inducement? That second pullback, same entry process will be applied. It is very important to always check with the higher time frame to know the current inducement situation or point in the structure. Okay, because sometimes after price has given this type of structure in the higher time frame and then this is a break of structure, we want to look for our entry to sell from this point to this inducement point. But it may happen that price will just take from there, make another inducement without coming to this main inducement point. As such, from here I have to look for another pullback entry to sell to the inducement if there's any entry like that available. Now, how to trade counter trend? How do you trade it? This is the things you need to know. After the break of structure with candle closure, switch to lower time frame, then wait for first break of structure, that is bullish. Then on the second pullback, it would count as change of character. We can make entry after the chalk, which is that second pullback now, which is now the change of character, to set to the major trend inducement. Okay, this is what I'm talking about. Price make this type of pullback inducement. We try to sell at that point up to this major time frame inducement. Then probably before price will make another movement upward. This is the pictorial representation of what I'm talking about. We see this is a bullish trend, inducement taken, pullback, break of structure with candlestick closure. You can see the candlestick closure there. This is on the daily time frame. Okay, candlestick closure. Then when we come to the when the candle closes above, then we automatically come to the 1 hour time frame. In the 1 hour time frame, we see this type of structure. Price can be making bullish movement also, break of structure. This point is supposed to be our inducement to continue to buy, but since this is the first move, there are a lot of people that are trying to say yes, while they will look at it as okay, one is change your character, all of that. No, the best option to do here is after there is break of structure, this pullback here is our change of character. Then we need another inducement to tap on our extreme order block. I hope this is understanding. This is just how the picture is. The first pullback after the first break of structure is confirmed. This first pullback will be a change of character. Then we want price to retrace to go and take out inducement, probably tap on this order block and continue to do what? Continue to sell until this major time frame inducement. So we are anticipating price to come to this major time frame inducement, probably give an entry here we can buy, or you can also come tap on this extreme order block and buy on the higher time frame. But all the pullback trading will be trading is in the lower time frame after there is a break of structure in the higher time frame. And where is our target point? Our target point is on the major time frame inducement. When price get to that place, that will be our target. We can leave the market then to look for the higher time frame price action here. What is the entry that price is going to give to buy and continue the trend, or maybe price will invalidate everything and make the higher time frame change of character. It all depends on what price want to do. Okay, I hope this is very simple and not difficult, and we know that at this point you can use two things can happen here. The first thing, after price take this inducement, price can give simple candle, single candle order block and continue to sell without this entry, this order block mitigation. The second thing that price can do, price can come and take out this higher point here, this order block. Price can take it out with wick. If it happens that price take it out with wick and the wick happens to form our institutional funding candle, we know what is our institutional funding candle with this type of wick, another candle close below it. What do? This will now be our single candle order block. We can place our entry here and sell accordingly. This type of model applies both for buying and for selling. This is for bullish trend, and that is why we have to sell in the lower time frame when we see this type of structure happens. Then it also happens in the bearish trend also. If you just have to make reversal of the case. That is how we trade counter trend. And the best way to get more familiarized with it is when we see it in the market more and more, it will just automatically become part of you. All right, as we go into more case study on this, you will understand it very, very well. Thank you.